So Balwant, today I believe you are going to walk us through a very elaborate presentation and tell us step by step what do we need to know when it comes to taxes in India, particularly from an NRI perspective, and what accounts do we need to have as well in order to be efficient.
Small presentation, but I have taken out the important provisions which are applicable to NRI, income tax provisions. Next, I will discuss about acquisition and transfer of immovable property. I get a lots of queries from NRIs about how to acquire or how to transfer or what are the tax implications, etc. I will cover all those things. And then I will take up the banking provisions and investment options, major investment options for NRIs. Residential status under FEMA and tax is different, as I said earlier. So for the purpose of taxation, the taxpayers are classified in three categories: resident, but not ordinary resident, and non-resident. For FEMA purposes, there are two categories: resident and non-resident. All Indian citizens residing abroad or the persons who are of Indian origin and OCI card holder are treated as NRI for the FEMA provisions. The criteria for income tax purpose is physical stay in India. So a person becomes a non-resident if he is out of India for more than 182 days. And there is a second condition that if the person has been out in India for less than 365 days and for less than 365 days in the 4 years prior to the relevant previous year, and he has not been in India for more than 60 days during the previous year, then also he becomes a non-resident.
Okay.
A person becomes a resident and not ordinary resident, which is basically for academic purpose, because it is not very use for the taxpayers. If he has been a non-resident for 10 out of 9 years,
okay,
or he has been in India for less than 729 days during the 7 years preceding the previous year. So these these two conditions will make him resident, but not an ordinary resident.
Understood.
For the purpose of FEMA, it is generally the intention which is considered.
Okay.
However, a person may become a non-resident for FEMA purpose if he has been outside India for 182 days. At a stretch.
At a stretch, okay.
Not exactly at a stretch, but
over the last year.
On a particular not last year, on a particular day, if it has been out of India for more than 182 days in the year, then he becomes a non-resident for FEMA.
Okay.
But a person becomes a non-resident irrespective of his physical stay in India if he leaves India to take up an employment outside India, or to start a vocation or profession or business outside India, or he leaves India with an intention not to return to India for an indefinite period. So if the three conditions are, any of the three conditions are satisfied, or a person lives under these three conditions, he becomes a non-resident as soon as he boards the plane taking him abroad.
Understood.
So the physical stay is irrelevant. So a person may become non-resident on 1st April, or he may become non-resident on 31st March also. For income tax purposes, residential status is determined at the end of the year on 31st March based on his stay during the previous year. Years prior to the previous year, but for the purpose of FEMA, it is instant.
Understood. Okay.
The purpose of classification under Income Tax Act is taxation, and under FEMA it is investment. What investments are allowed to a non-resident, or the remittances which a non-resident can make out of India.
Understood.
For the purpose of taxation, for a resident, a person who's resident in India, his global income become taxable.
Okay.
But for a person who's a non-resident, his Indian income only gets taxed. So what he does outside India for earning is of no concern to the government of India, and he even doesn't need any permission to earn any income outside India.
Okay.
Some incomes which are exempt from NRI. One is the interest on the NRI account. I will explain what is an NRI account in a little while.
Yeah.
It's exempt as long as he is a resident under FEMA.
Okay.
But for deposits which are kept in the NRO account, the entire interest is taxable, and even interest on saving bank account is also subject to TDS, which is not applicable in case of resident. So for resident, TDS is not deducted on the saving bank interest.
Okay.
So on NRE account is fully exempt.
Yeah.
Interest on NRO account is taxable.
Okay.
Including the saving bank account.
Understood.
So if you have a NRO FD or NRO RD account, you have to pay the tax, and the bank will deduct the tax at 30% at the applicable rate.
Understood.
And the other category of bank account is a FCNR account.
Okay.
Interest on FCNR is also exempt as long as you are a non-resident or resident but not ordinary resident. So a person can become maximum for 2 years a resident but not ordinary resident at a stretch.
Okay.